All right, daily recap of Friday the 26th, the 6th of January. So let's just get right into it. Took two trades today. I was disciplined. Like yesterday, I was really disciplined. I said like, okay, I got this higher area, I got this lower area. I'm not gonna trade before that. Did that, listened to myself. There was one trade that fitted the plan, but because there was so much liquidity to both sides, it was not like the highest probability area. Then today, uh this morning I wrote down for myself like, okay, I've been patient yesterday, but maybe I was a little bit too patient, therefore I missed a trade. So I wrote down like, okay, today I want to take more action. And actually we had a quite strong setup. We continued this bearish range. We know where we are in the high time frame. We had this internal range liquidity, and this was our retracement. Price now looking to get up here, maybe react from here or go even higher and take out this liquidity over here and take out our previous weekly high. But that's for a forecast for next week. So let's go about today. Starting here, Asia, what happens? So we take out this low, we take out this low, we take a previous daily low, we take a New York low. Going down lower, we can see we took out Asia low. And then coming into coming into Frankfurt, what can we see? I was a bit early on the charts. Oh, actually, I was not. I was just on time. But I saw this and it was like, okay, I know this is a bit minor. This is a bit minor. It's just like, yes, these highs are taken. So we price takes these highs, but what are these highs? What did they do? If anything, this is where price push lower from. If anything, this is where price push lower from. So yes, it's early buyers, but it's not a strong early buyers. It's also pretty early, 5 a.m. UK time. Then impulse down. And this impulse down is followed by now looking back at it, it's followed by correctional way up. This is not it's like from this order block to here, it's impulse, then it's correctional again. It's not like a strong break or anything. So it's not a really good trade. Like it had the confluences, early buyers, Asia low taken, New York low taken, previous daily low taken. Overall, zooming out, we are in this in the we were in the discount of the hold up, sorry. We had still the 1 hour order block sitting over here, and we were still on the discount of this low, high, higher, low, high, high, higher, low, and then this was our higher high. So we were still on the discount of this range over here, like this. So I was like, okay, longs are good, but I'll also had in mind like, okay, we have these lows all here, liquidity, so that can be taken out. And if I listened to myself, I would have been patient enough to maybe wait, but you also don't want to be too patient. So maybe the first trade wasn't the right trade to take. Then the second trade I was more proud of. Let's bring it that way. So let's ignore this trade. But it had the confidence, but it was not strong in terms of price action, price behavior wise. Because we had the impulse down, Asia low taken, a weak form of early buyers. Also, this is more cluster of wicks rather than it being a high that leads to a low, if that makes sense. So you can also class it like that. So let's just remove that. Then what happens? Impulse down, first trade, break structure, liquidity building up though, and just trade through my stop loss, and that's -1 for the day. Then what do we have here? We have our low, we have our high, we have our low, we have a higher high, we have a lower low. So second set of early buyers now. And this is like 0.1 pip. Break is a break. I always say that break is a break. If you're not gonna class this as a break, then you have to make other rule. Maybe 0.3 is a break, whatever you want, but or stick to breaks a break. So breaks a break. And then impulse. This was impulsive compared to this. This was impulsive. Also, this was Frankfurt Open. So liquidity gets into the market. I was like, okay, nice. let's try again. Follow the plan. Limit a bit higher. Why a bit higher? Because why not? Give it a breathing room. You don't want to miss out on this, you know. If you go on 2 minute, still same block. So what did I do? Just entry here, stop loss below, 5.5 pips, and there you go. And it just took me out. And then this is what I want to test out with Frankfurt. Because if you take the structure tool, we got a high, low, lower high, lower low, higher high, lower low, higher high, lower low, lower high, lower low, bullish break. We had all the confluences over here already. Early buyers again, bearish break, and bullish break. So this would be been your other trade. This would have been your last trade. In this area, you can take. I didn't take it because I already had 2 trades. It's Friday. I already went off plan this week. Why I don't want to go off plan again, so 2 trades is enough. And you see, just 1 to 3. Why not target higher? You can already see I have this 50-minute POI over here. We have this 5-minute structure going on over here. High, low, lower high, and then we got high, low, lower high, lower low. So this was my most recent range. If anything, for that long, you go break even at the 50%. So it would have been a break even trade, or you close your trade at 1 to 3. Depends what you like. Again, I didn't take it. I just took 2 losses. Shit, it's like that. This week's been hard in terms of discipline. Well, actually, Wednesday was hard, and like I see big improvements already through the week, so that's good. I think next week will be even better. Goal for next week's to end in profit. Don't get the account back up in profit, but just end in profit. So what happens then? We got a low, high, low, and then we continue this range on the 5-minute. So we get a high. Let's get my 5-minute. High, low. Inducement up anyway, as well, because we got previous daily lows. Over here, it wasn't a previous daily low yet, but it was New York low. So inducing people to buy here. Let's see, is there anything to do? Oh, there's like a 5-minute PY over here. So yeah. So inducing people to buy. People think like maybe this is a break of structure. They want to buy here, here, and there. Taken out, bearish break. And here we are in London. And if you follow this, so because we were below all these lows, I wasn't looking for shorts. I was looking for longs. They were like the highest probability trades, in my opinion. Though shorts made sense. Why did shorts make sense? Because we still have, what is this thing slow today? We had all these lows, and you can see this low just takes out this one and this one, but the Asia low remains intact. So we got this Asia low still here. If anything, we got this cluster of lows here, and this is the final low. So we got that low. Going down lower again. We got our 50-minute POI. Following that, can we see? Oh, by the way, on my long trades, or the long trades I try to take, look at this on the 1 hour. These candles don't say shit. Oh, sorry, I should swear in the last, but impulse down, and this is not showing any bullish intent. So it's not, if anything, like from the high time for candle price candles, you can't tell there's like a strong buy. Going down to the 15, it's looking even worse, to be fair. Look at this impulse, correctional impulse, wicks, shit price action, not strong. All right, let's go lower. Oh. Then coming into London. London Open is around here. There you go. Here's London Open. Liquidity gets pumped into the market. Then there is our entry drill. We get the early sellers. Early sellers taken out. Bearish break. There's a minor break over here that Rich showed on his on the webinar, but yeah, that's too minor for me. Would never take that. And then you have this order block over here. And just place it above this high. Because when you go on the 2 minute, you will see, there you go. Short. 39. And over here, 2.6, 3.1. And that's a clean trade. Targeting 1 to 5 or 1 to 5 hit before this. And why can you enter here? First of all, we got 3 lows to the downside. 1, 2, 3. Minor break. So this happens a lot. You can enter from a minor break. That, like, why is this a minor break? Because you got this still going on. You got low, high, higher low, higher high, and price comes into the deep discount. But you can enter it from it because it's in line with the higher time frame structure, and it's building up liquidity to the downside. So the trade is valid to take. Although it's in the deep discount for the minor structure. It's a minor break inside the minor structure. So it's a double minor break. But yeah. And that's our entry drill. Perfect. Let's see one thing. Actually, we got a little disruption of highs in here, but it's really small. But you could maybe take 1 to 10 from this, and I think it hits 1 to 10. You see, building up liquidity to the upside. Dead zone during pre-New York, late London, after London. 1 to 10 hit. I'm not gonna explain that entry drill, but that's a different entry drill. The 1 to 10. Well, it's here, but it's different. So 1 to 5 hit and partials taken, and then the rest 1 to 5 also hit before this low. So we got, I think we don't reach discount yet. No. So yeah. So one mistake I made is this one belongs here. And there you go. And this was a trade of the day for me personally, because it fit the entry drill. Then let's continue. What happens during, let's zoom out first before we continue. Where are we? Where can we go? So we have this, can ignore this low. I want to ignore this low, and I want price because we think in highest probability area. So highest probability area is below this low in this 1 hour fair value gap or 1 hour POI. All right, that's our idea of trading. Let's continue. Let's see what happens. No early buyers here. Nothing. Just equals. Maybe this is your early buyers. High that leads to a low and then boom, but nothing major. What the fuck? Oh yeah, that was the news, right? So now you have your early buyers over here. Early buyers taken out. If anything, this is your early buyers, but yeah. And then you can, yeah, actually, all right. Hear me out. Actually, there's a trade, but so you get your early buyers because we took out these highs that led to these lows. So, and then we got a break to the downside. I was sure the break to downside was first. Someone told me. Then we get the break to the upside. So we get the bullish break. And there you have your entry candle. And actually that's a valid trade, but it's yeah. Damn, that's a good trade though. 81, 84. I think spreads will take you up somewhere. 3.8, 4.2, 4.3. 1 to 5 hit before taking this one, and even before taking this one. Then even so, if you take the long, where can you target? I would target Asia highs. That's a 1 to 9-ish. Can target this high, 1 to 12, 1 to 11, 1 to 10. And then your next target is the 50% of this bearish range, high down to low. I'm curious if you already broke it, which is a 1 to 15, I think. 1 to 14.2. And now let's see if there's a continuation trade. I don't think price comes back that deep. There you go. All right, stop. Okay, we didn't see that yet. Continuation trade, because we already had all the confluences here. We broke above this structure over here. We can either look for an entire entry drill there, or we can just look for the the direct entry. So this one is already a break even or even taken out because one Asia hit, 1 to 10 hit. Then you get your continuation trade. Stop. That's I already said it, like it's coming back, and then if it's coming back, you have your entry. Gotta be honest with yourself. Usually it's like, oh yeah, I knew there's gonna be trade, this, that, but I already said it. So let's make it count. 27, 30. It's a large stop though. 8.2, 8.7. There you go. And where can you target? Up here, 1 to 5. That's your first target. But we said you can target this. So this already taken the high stake, and certain next high is either here, or you target just the 50% of the range. Continuation trade, let's see. Oh, damn. Boy, yo. Holy shit. And there's your there's your other 1 to 5. Partials taken, break even trade, stops below this low because this is all mitigated. This is the last unmitigated candle. And 1 to 10 gets hit as well. So continuation trade or tricky how do you say it? Tricky entry drill trade and super clean continuation trade. And lining up the high time frame confluences, what do we have? So we have not only we are below old lows, we took previous daily lows, we took Asia lows, New York lows, we took London lows, we took all the liquidity from here. We went into the extreme, we tapped into the 1 hour POI, and then we had our long. So low stake and liquidity taken in line with this blue structure, 1 hour POI. Yeah, that's all the high time frame confluence you can get. There's nothing more. And lower time frame wise, we had the entry drill. Now let's go to live price action. Did we take it? Ooh, it's slowing down. Interesting. Ooh, very interesting. Some form of early sellers over here. Minor break structure over here. Intricate entry over there. I see all this, but it's hard to spot when you're live trading. And it's even harder to take action on it. All right, so this was the daily recap. Actually, 3 trades that could have been taken. And I should have taken at least a short, but because of the long over here, the 2 longs, I was like, okay, I'm done for this week. So next week, focusing on being disciplined, being aware of structures, because I was not really aware of this structure, or I was aware of this structure, but didn't really anticipate on it, and be more aware, but be more aggressive in a way that I should take action, which I did today, which I didn't do yesterday, but passive aggressive. Just wait for the highest probability area and then shoot your shot. All right, that's it, guys.